Good evening, friends. Welcome back to my channel, Intraday Trade. So this is a video based on pure price action trading, part 2. So long back I had uploaded part 1, and since then I did not do the continuation, and I'm extremely sorry for that. And a lot of people insisted me to record the part 2 and 3 as soon as possible. And today is the day I thought, let me just do this. So let's directly jump into it so that we keep the video a little shorter and we also complete it on time. So people who did not watch the video, the part 1, please do watch it. I'll give the link in the description box. And this is definitely going to be an interesting video. And this is a setup which I thoroughly follow for my own trading every day, especially in Bank Nifty, and that too in option buying. And this is the only strategy which can give you a superb entry with a very small stop loss, not beyond 25 points. I don't even remember when I had put a stop loss of 25 points. I hardly take an SL of 10 or 15 points in Bank Nifty, and the target is usually around 80 points to 100 points. So just calculate the risk reward that you have in this. Okay, so let's quickly do a recap. So our price action trading is based on the candlesticks and volume bars. So for a demand area, what we discussed earlier is we will plan to buy when we see two consecutive green candles with two rising volume bars. Okay, and while I'm just recording this video, I'm trying to search the pen that I used to draw. So anyways, so and for a supply area or a resistance, what we look for is two consecutive red candles with two rising volume bars. So just to, if I have to draw, how does that actually look on the chart is basically you will see two green candles. Okay, we are not interested in the shape of the candle, but definitely we need two green candles, and at the same time at the bottom you need to look for the rising volume bars. Okay, so this gives us support. Okay, and how to draw the support we have already discussed in the part 1 video. And how does the supply area looks, or the resistance is we are interested in two consecutive red candles with rising volume bars. Okay, and this gives us resistance. So this is all we need, and we plan our entry based on that. With this identification, we decide our demand and supply areas. During intraday, when you come across the first instance of formation of consecutive candles with rising volume bars, the most successful entry will be post accumulation or distribution phase for a bigger trend. So what does that mean is I'll just draw an example here, and then I'll also show that on the chart. So in the first time when you see two consecutive green candles with rising volume bars, what you do is you mark a support basically here. Okay, after these two candles, so these candles are telling us that there is demand at this place. Okay, demand at this place. So when do we come to know that actually there is a demand? Is the price should respect our support, or the price should respect these two candles. So what I normally do is post these two candles, I wait for at least 30 minutes. Okay, so 30 minutes, what market will do is it will start consolidating here. Okay, so after a green, you may see a couple of red candles here, and then So when you're marking demand, do not worry about any red candles forming, high volumes. So do not worry about it. So we will look that only to mark resistance and not support. So then what the market will do is, so see here we already are done with 5-6 candles. So almost 30 minutes is done. So next what I do is, so this candle's low, or if we have any reversal candle, say a hammer or something like that, then I prefer that low. So to mark the swing low, I've already discussed this earlier. So I decide my stop loss. Say that this is Bank Nifty and this low is say 37,540. Okay. Or let's do one thing, instead of considering future price, we'll consider the option price. Okay, say it's an at the money option and this particular price is say 350. So I put an SL at 350. Okay, so this is my SL and I take an entry 15 to 20 points above. So let's say I put an order at 370. Okay, so let's imagine that it is somewhere here or maybe somewhere here. So the market will slowly come to that place and it will give you an entry. Okay, now your entry is done. You have your SL. Target is always 1s2 3 or above. So when you're giving 20-point SL, then your target should be always around, say anywhere between 50 to 100 points. Most of the time you will get 100 points move. Okay, or I think the 100 points, so I'll segregate into percentage wise. So 80% of the time you will get 100 points move. Okay, and 95% of the time you will definitely get 80 points move, and 100% of the time you will always get 50 to 60 point move. So this itself indicates that this is a very beautiful risk and reward ratio. Okay, and this is how I take my entry. I'll show you examples too. We can also enter on an immediate basis for smaller targets. So like what I do is, sometimes if I am interested in scalping and I'm also bullish in the market, if I see two rising green candles, sorry, I made it as a red candle, it can create confusion, so we'll avoid this. So in case if we have two rising green candles and immediately I see a red candle, at this time what I do is I try to enter at this place with this point as an SL. So this SL will be around 10 to 15 points. Okay, then immediately you will see a green candle. So I take smaller targets here, like if 10-15 points SL, then my target is around 30 to 40 points. So this will hit immediately. Okay, but I don't prefer this entry. This is a superb entry. Okay, so this entry will give you a very good risk reward. So this is our recap. Let me quickly delete this and we'll move on to the next slide. So implementing the strategy based on our previous analysis, we will mark the demand and support or supply resistance to decide to go long or short. Now we will choose the ATM call and put strikes for analysis and match it with the future charts. So what I normally do is, sometimes if I have time and if I'm marking these levels on Bank Nifty futures tonight, then obviously at the same time I choose the call and put also, and I mark that same levels on the chart. So if you open my Zerodha Kite, you will see a lot of options with a lot of these demand and supply areas being marked, and I definitely trade them. It gives wonderful results. So not necessary we have to depend on historical levels. We can mark new levels based on same concept during the day and trade based on that too. So yes, you can do that too. Not necessary that you have to do an analysis a night prior. On the same day also, you can definitely mark these levels on the live chart and trade them. Okay, I'm going to show you a good example based on that also. That is the expiry, the 4th August expiry, when we saw the market falling huge. So it gave a beautiful entry on the call side also, and I have traded that. So I'm going to show you that chart also. So I took a screenshot of that. Okay, now let's see some quick examples. So this is Bank Nifty future. So what happened is, after a gap down opening, so we have a very big candle here, and then I saw two consecutive red candles with rising volume bars. So that means what happened, I know that this is my resistance. So since this is a very big candle, I'm not interested in marking this high as my resistance, because this will become a very big stop loss. However, the confirmation comes at this point. Okay, so I'm more interested in this area. So that is one of the reason I have taken. So this is a green candle which is hidden behind this shape. So I took the high of that green candle as the resistance. See what market did? It consolidated, slowly came back to that place again, and then immediately it started making lower highs, and then finally a breakdown and a solid breakdown. Okay, so we'll check this on the options chart. So the same level I had marked on the put. So this is that particular put. So what it did, so this was the first red candle. It gave us two consecutive green candles. Okay, and this is my support basically. So it consolidated here for some time, and somewhere around this place you take an entry. Okay, so anytime after 30 minutes you can prefer taking an entry. What happened? It gave you an entry, or some people can even enter here. This is also fine. Okay, then it gave an excellent move. So the premium was somewhere around 450. Okay, so around 450 you would have got an entry, and just check, it almost moved to 600 and sorry, it almost moved to 670. So it almost gave an up move of 200 points. So this is how I trade the Bank Nifty options, and we'll also talk about this example. So let's look at that. So that is on the next day. So next day what happened? Market opened gap down. Okay, it opened gap down. We saw continuous green candles, but all the volumes were failing. Okay, so that then what happened? We saw two consecutive green candles. So this is what I say. We are not interested in the shape, but we are interested that there should be two green candles with two rising volume bars. So this will be helpful for me to plan my call entry. So what I did, I have taken this doji, the red candle, as my support, and I'm waiting for it to consolidate and come down to this level. So this support is my entry point, and also just about, like, this low can itself be your SL2. Okay, so the best thing is, mark this green candle low as your entry point, and this red candle low as your SL. Okay, so hardly any difference. I'll show you in the options. So you wait for 30 minutes and then you put an entry. What happened? It gave you a superb entry here, and then quickly the market went up and all the way to this high. So let's check this out, the options also. So this is the okay, just a second. I think I failed to put the option. Yeah, we have it. Sorry. Okay, so that was the futures chart again. So this is the place we saw two green candles with rising volume bar here, and mark this low as my support. Okay, so in this case it touched the support, okay, without any problem. So the entry that we spoke about was this particular entry. Okay, so let's check the price. So 386 was our SL in this case, and we'll just put about 15 to 20 points above for our entry. So let's consider 405 to be a round figure, and market all the way came to 400. Okay, so this point is 400, which is clearly visible here. So imagine that you put an entry at 405, and this is your entry. Your SL is 386. So just about how many points? 19 points. Okay, 19 points SL, and the immediate target was the day high, which was around 507. So it gave a 100 points move. So 405 to 507, it gave a 100-point move. So this is how you need to book your targets. Again, it came back to that place, and this time, slow and steadily, it also broke this high and went all the way to 600. So I hope this is building confidence in you, because there are a few traders who have already started trading based on this, looking at the part 1 video, and this definitely is a very good strategy. So these are examples of 4th August expiry. So this was the expiry day trading. If you check this out, 4th August, 38,000 PE. Okay, so when did you get a confirmation that the market is going to go down? So our algo also took PE trade, and I had shorted calls based on this rising volume bar, which I saw here. So two small green candles. Just look at the rising volume. The volumes were tremendous. This gave me a confidence that the market is going to go up. Okay, but I did not expected such a big fall. So what happened? Here you identify the price was around 60. Okay, so we'll plan entry somewhere around 80 with a 20-point stop loss. This is our SL, this is our entry. Okay, so market sustained for almost 1 2 3 4 5 6 7, so almost like 30 minutes, and it gave an entry here, okay, in this hammer. So this price was somewhere around 80. I still remember. I did not expand the chart so that we could have seen this entry price. It gave a beautiful entry, and then boom, just only green candles. All the green candles had rising volume bars. Okay, so from 60 it went all the way to 800. So we may not see such a big target every time, so we stick to 100 points target. But when there's a call shot and this is an expiry, so obviously you can hold your call shots. So this is how the market went on the upside. And similarly, in the same chart, if you look at this, there is two consecutive red candle and with rising volumes. And what happened? Market was trading at this level. After some time, it came to that same place again. Okay, so in this case, this becomes your resistance. It came to the same place, and then again it fell down. Okay, so look at the magic of this rising volume bars. And the call entry that I told you, let me show that to you. So we know that market fell down heavily from almost 38,200 to 37,249, and then I was waiting for the rising volume candle formation. So these were the two candles which had the rising volume bars. Okay, so I marked a support at this place, but ideally the support should be here. Okay, so what happened? I think I took an entry somewhere here and I exited at this point itself. I targeted about 80 points and it gave me the 80 points target. So almost from 140, it went all the way to, I guess, 295 if I'm not wrong. So I did not traded this, but I was expecting it to go to 340. But since it was, after a strong downfall, we are trading retracement. It is always better you stick to a small stop loss and a smaller target. Then see what happened. The market broke this level. So this is that support. So after breaking this particular support that we draw or drew earlier, after this red candle, we did not get a follow through candle. That means there is always a chance market will claim this range back. If you have heard the terms that bulls are defending their position, bears are defending their positions. So this is what we call it as defending. Like, it broke an important support. However, there is no follow through candle. Like, we do not see another red candle here. Immediately, this fall was arrested and it claimed this region back. So when you see such things, okay, for example, you try to take an entry here and it hit your stop loss, no problem. If it is not giving a follow through candle and if it is reclaiming this level, definitely you can enter here and see the rally went all the way to 340. So this is how you trade. This is what I want to cover in the part 2 video, and use the bank nifty futures and options simultaneously. It will give you beautiful entries with beautiful risk reward. I hope you all understood this, and I'm sure this will build confidence. You just need some practice. Once you do it for a week also, that is more than enough. You will start trading it like a pro. Okay, and post this video you will also get the part 3 video that will be a bit smaller, because that video will tell you how to, so instead of drawing support resistance, what is the other alternative way to trade this is something which I'm going to discuss. So I do that in the options chart very often, so thought of discussing that as a part 3 video too. So thank you for watching. I hope you all loved this, and definitely watch this video and share it with your friends. You will see that everyone will tell you, boss, this is an excellent strategy. Thank you for watching. Let's meet in another video. Till then, take care. Bye bye.